Greetings. Thanks for joining me for the video presentation, No Cost Secrets to Boost Stock Investment Profits. When you're trying to manage your family budget, do you find expenses that you really ought to get rid of, but you're reluctant? For example, let's say you have premium channels you subscribe to as a part of your cable or satellite television service. They're too expensive given your current financial crunch, but you really enjoy them and you'd hate to give them up. If you can't identify with the above example of an emotional attachment, you probably can think of a number of similar examples that would apply to you. It's interesting to observe how emotions impact the final decision-making process. Why is it that feelings often override logic when it comes to money? Experts will tell you that it's best to look at investments strictly from a business perspective. Any emotional attachment tends to stifle objectivity when it might be appropriate to sell that investment. When it comes to investments in coins, coin collectors often feel a strong emotional attachment for their coins. They fail to see the financial value of the investment. They like the fact that they own these beautiful or historic coins, and emotions win out over logic. As a business decision, it might be best to look at these coins as an investment that should be sold when the time is right. Some people inherit stocks from a loved one that passed away. These stocks carry with them an emotional value. They associate the stocks with the loved ones, and they can't think about selling these stocks for emotional reasons. Some people experience an emotional attachment for stocks they own at a company for whom they have worked for many years. They somehow feel that to sell those stocks would be like turning your back on the company that did so much for them. However, companies often go through business cycles where the stock price ultimately drops well below its previous highs. Too many employees and ex-employees of high-flying companies hang on to their company stock for emotional reasons, and eventually they're caught with major losses after holding those stocks too long. Stocks are not our friends. It's best to look at stocks as investment vehicles in which you temporarily park your money based on a belief that value will increase. If you like a particular stock, for any reason other than the fact that its price is rising, then you're likely forming an emotional attachment. Beware. Investors often develop an emotional attachment with companies that serve a societal need that we can identify with. For example, a company that is developing a cure for cancer is a company whose stock you might prefer to own because you may have had cancer, or a family member or a friend may have struggled with cancer. Never let your emotions get in the way of a profit opportunity. Keep in mind that you only make a profit when you sell a stock. Some actions you can take to prevent emotional attachments. Number 1. Treat each stock as all other stocks in your portfolio. Number 2. Invest equal dollar amounts in all of your stock investments. Number 3. Before you buy the stock, create a target sell price at which you're willing to sell should the stock price go up. Number 4. Also set a target sell price to limit your losses should the stock price go down. Place a stop loss market order immediately after you buy the stock. Look at stocks that are flat. That is, they're not going up and they're not going down. You might be better off selling these stocks and reinvesting that money in other stocks that are more likely to go up in the near term. In summary, emotional attachment to any of your stocks for any reason is a barrier to financial success. Look at your stock investments from a business perspective, and you'll have found the secret to boosting your stock investment profits. Keep in mind that the reason to own stocks is not to feel good about what you own, but to feel good about the increases you're seeing in your portfolio value. Have a great day.